The last question for today is about home construction loans and how are they different from a typical loan. So what should someone expect when looking to obtain a loan for home construction, for example, to build a custom home?
So there's multiple different types of construction loans. If you're talking about ground up construction, meaning you're just gonna buy a piece of land and then hire a custom builder to build your greenhouse on that land. We can do that. It's called a one-time closed construction loan. And essentially what we do is we get you to provide architectural plans and specs for us so that we can see on paper what the house is gonna look like when you're done. And then we send off those plans and specs to the appraiser, and we have it appraised based on what it will be worth once the construction is complete. You can borrow up to 95% of that number. It's actually it's 95% of the lower of either the appraised value subject to the completion or the total acquisition plus cost of construction. So let's say, for example, you found a lot that's $100,000 for the piece of land, and you want to spend $500,000 building a house. So the total acquisition cost is $600,000. You could borrow 95% of that $600,000, so you'd only need 5% out of pocket. You do need to be aware that on construction loans, the closing costs are higher because we have to hire people to manage the financing side of the entire construction process. So every few months, you're gonna check in. We're gonna send out an inspector to make sure the construction is going according to plan to protect you as well as to protect us. And then we will release draws as the construction progresses. So at closing, the first $100,000 would be released immediately to the seller of the lot. And then you could specify an amount that would go to the builder to, get permits and whatever else might be needed right up front. And then, 30, 45, 60 days later, the builder's ready to move on to the next aspect of the project. And so we would send out an inspector, ensure that everything he said would be done is done, and we'd release more money to him at that point. And this goes along all the way through till the construction is complete. And at the end of the construction period, the loan modifies from a construction loan into your permanent financing that looks just like a standard 30-year fixed Fannie Freddie conventional loan. So that's one option. Another option that we don't have available here at Cardinal is a true construction loan, and that is where you just go to a bank and you get the money for construction and they do the draws to the builder, much like I was previously describing, except at the end of the construction period, you then have to refinance that mortgage into your permanent financing. It's called construction to perm financing. And I do offer construction to perm financing, but we don't do the standalone construction loan. We only offer the one-time close construction loan. And then the other option is, let's say you find a house that mostly meets your needs, but needs a lot of updates, might even need a new roof, or you might need to do an addition to the house or completely renovate the kitchen. There's also renovation loans available that work similarly. We get the plans and specs for the renovation that you plan, and we provide that to the appraiser, who gives us an appraisal report subject to the improvements you have planned. And then the same draw process works, and then at the end of the construction, it converts to your permanent financing. So the renovation loan and the one-time closed construction loan are structured very similarly, work very similarly. All of these construction type products do cost a little extra because there's some more manpower that goes into managing the process from the financial end of things, as well as it's a little bit higher risk for us as the bank. And so again, that risk-based pricing comes into play. So you pay a little bit more in fees, probably a slightly higher interest rate, but it's a great option in a tight market where there's not a lot of inventory, because you can find a house that might not perfectly suit your needs. It might not even be eligible as is for traditional financing, but with a renovation loan, you could make the improvements you need to make it work. So it's a good option. My construction loan product is going to be capped at conforming loan limits, which is $47,200 for 2022. So using the same philosophy for the question though, to say the lot cost $100,000 and the house cost $500,000 to build, then yes, we would finance the whole $600 minus your 5% down payment. So at closing on that construction loan, the first $100,000 would be dispersed immediately to the seller to pay off, them for just the land piece. And then the other nice feature to one-time closed construction loans is that you only pay interest on the amount of loan that you've drawn. So for example, in that case where the $100,000 went immediately to the seller to acquire the lot, and let's say at the same time we did a $50,000 draw to the builder. So you would only have $150,000 of your $600,000, $620,000 loan that was drawn. And so during the construction period, which is usually 6 or 12 months, you make interest only payments based on the amount that you've drawn. So until the next draw, you would only be paying monthly payments that were equal to the interest only, no principal, on the $150,000 that you've just drawn out.
Very good information, thank you. Hello and welcome to my channel. I'm Oleg Sedletsky, your Dallas area realtor. This video is part of my conversation with local loan originator Wrayanne Williams. You can find the link to the full video in the description below.